Hello guys, so welcome to today's session. So today we are going to be talking about currency pairs and how to equally calculate lot sizes as well as speed values, okay, and what they really are. So what are currency pairs? A currency pair shows the value of one currency relative to another. The base currency versus the code currency. Like for instance, if you're on TradingView or any platform that has to do with trading, then if it's Forex, then you see the euro against the dollar or probably GBP, GPY, or any other currency pair that you're working on. So the first currency you see that's on the left represents the base pair, and the second currency you see on the right represents the code pair. And on your screen, you always see at the right side of your screen the display of the prices there. So the display of the prices simply is the price of the code currency, not the base currency. So similarly, while you're on your chart, if you do your analysis and you anticipate that definitely the markets are about to start moving upwards for a buy position, then you're simply saying that the euro is going to gain more value against the dollar while the dollar goes down. So the reverse is true as well, where if you anticipate that the euro is going to be going down, definitely you're saying the US dollar is going to equally be gaining strength as well. So that's what it literally means. We'll go to the chart and see what this actually means, okay? So whenever you see this particular price on your terminal, it simply means 1 euro, okay? Even though 1 euro is not here, 1 euro is equivalent to 1.10 to 1.10 USDT as per the current price of this slide, okay? So there are different types of pairs. We have major pairs, okay, like the euro USD, we have the GBP USD and other pairs as well. We have minor pairs which are not that volatile and exotic pairs as well. So what is a pip? Okay, these are terms you have to get familiar with. Okay, a pip is the smallest price move in a currency. In a currency pair, the smallest price move. For instance, if you have Euro USD, for instance, excluding GPY pairs, Euro USD pairs, the pip value is always recognized from the fourth decimal. Same as the GBP GPY pairs, or almost all GPY pairs are recognized from the second decimal position. Okay, you don't have to worry about maybe before entering the position going to look at all this before entering your position. You can just use the tools available on your terminal or on your trading platform. There are already tools available to calculate all this very simply. So you don't have to be worried about all this, but it's good to understand what you're getting into. That's why in the next slide, I'm going to be showing us the formulas to calculate the pip value, okay? And I'm going to talk about these values much more in-depthly. So here we can see this is the formula to calculate the pip value. Pip value, as you said, is the smallest value move, okay, of any currency pair, okay? So it's very important that we note that. So similarly, as well as lot sizes. Based on this calculation, this is a standard formula that you use to calculate the pip value. So if I'm to make it simple for each and every one of us watching this video, that whenever you're trying to use a lot size of 0.01, okay, it simply means for every move, for every single move, that's for every pip, okay, every pip is going to represent $0.1, okay? And if you're using a lot size of 0.1, it simply means every pip is going to represent $1. And if you're using a lot size of 1, it simply means every pip is going to represent 10 USD. Okay, it's very important. So this enables us to know how to calculate what we can be losing or what we can be getting before entering a trade by calculating manually. But as I said, you must not necessarily calculate manually, because most of the platforms you're going to be using for your trading, they have some softwares that automatically do calculate these positions for us, as we are going to be seeing shortly after this video. So it's important. But if you want to really learn how to do the calculations, then it'll be good to take down this formula as clearly stated here in a way, okay? So it's very important for us to know that as well. So just a quick recap before we get into the charts. Always know your lot size. It's very important. Be careful which pair you're trading, and you have to be very careful of the GBPY pairs, and use pip calculators online for speed, okay? So it's very important for us to know this. So what are we talking about? Like for instance, if you're using TradingView to do your analysis, most of the times here, this is the euro card, as you can see on the top left of the screen. This is the euro card pair, and this is the This is the base currency, euro, and CAD is the code currency. Here on the right side of the screen, this is the current price of what? Of the code currency, which is CAD, okay? That means currently we can see currently the price is at the price of the current equivalence of 1 euro to CAD. 1 euro is equivalent to 1.58004 CAD, okay? That's the current price of the the current conversion from euro to CAD, okay? That's the current rate. So now, in terms of the pip value which we mentioned here, so you need to calculate, if you're calculating manually, for instance, you need to say this 1.54, okay, this 1.5 that moved to 8 right now, but I'll show us how to calculate it a little bit much more fast than this. So this is just one way of doing it. In a way, you can equally use tools on TradingView like this tool I'm about to use here. Let's say if I'm to get a buy position here, for instance, let's show us. By the time I click on it, this tool automatically calculates the lot size for us, okay? So you can see that here this is the lot, the pip value rather, not the lot size. The pip value gives us the pip value here, and if it gives us the pip value of 655 pips, if it goes for us, and if it goes against us, we're at 655 pips as well, because this is just equal. So if I should drag it downward, you see it increases. Now, what's the use of this value? The use of this value is seen when we are trying to calculate how much we are going to make if it goes against us. So since this is not a GPY pair, then it simply means that if I'm to use a lot size on this pair of 0.1, as I explained earlier on, a 0.1 lot size simply means every pip value represents what? Represents every pip value represents $1. If you're using a lot size of 0.1, every pip value represents $1. If you're using a lot size of 0.01, every pip value represents $1. Okay, and if you're using a lot size of 1, that means every pip represents $10. So how do you do the calculation? So assuming that you wanted to enter this position, a buy position, and you're using a lot size of 0.01, which implies every pip value represents approximately $0.1. So you're going to take 0.1 times 655 pips. If we do the quick math, if I take 0.1 times what? 655 pips, that should be giving me $65. Okay, that's what you'll be getting. Similarly, the reverse is true. If this market goes your favor, then that's what you'll be getting based on this pip. And if it goes against you, you'll be getting the same as well. Okay, or you take 550 multiplied by 0.1, you get how much will be going against you. So we're going to be talking a lot on risk management in the subsequent videos as to how you have to use them. So now, but let's say you don't want to do all of these calculations and you want to use tools that helps us to calculate this, helps us to really get what we are going to be losing or we are going to be gaining if the market goes for us very fast. So that's why this is one of the tools like XNES. Okay, this is a GBP USD. This is one of the tools, as you can see. As we are right here, let's say if I switch the time frame, or let's work with this time frame. So while you're on XNES, this is XNES terminal. Okay, so while you're on XNES here, before we got here, let's say when you log into your XNES account, this is the demo account which you created in the previous video. So before you get to the XNES terminal page, when you log into your account, you need to come to this icon that we can see on the top right corner of our screen. When you get to that particular sector of the screen, you have to go to XNES terminal. When you click on XNES terminal, then you're going to be redirected to the XNES terminal tab, which is the web page. So while you're in here, it's going to reflect your balance. This is the demo page you created. And if I want to enter a position here, we have the market order, you have a pending order. So if I click here, it's going to show us what is necessary. Let's say I want to sell this market, for instance. If I click on the sell button here, for instance, you can see this add stop loss just appeared and take profit just appeared. If I click on it, like to say add stop loss, it gives me this value. When I pull this particular line, this particular stop loss line to where I want to place it, it automatically calculates how much I'm going to be losing if the market comes to this position based on this lot size 0.01. So if I should increase the lot size, let's say to 0.2, for instance, it shows me I'm going to be losing 33 USD. Okay, and if I should click on this take profit button at the bottom here, and equally switch it to where I want to take the profit here. It's going to show me if the market goes my way, then I'm going to be making 60 USD. I've not entered the position yet. It does the estimates before entering the position. So if I'm all comfortable with what's happening, then I can now enter the position at the sell of maybe 0.02 lot. So in case you're not comfortable, you can keep increasing the lot sizes or decreasing it to see what you're comfortable losing before entering the position. This automatically calculates the lot size, automatically calculates the peak value for you and how much you're going to be losing or making if it goes for you or against you. So if I enter the position like that, you can see position is opening and it has been open. So if you're on XNES, then on XNES terminal, you can always just drag up from the bottom. You can see this is the position which I'm in right here. If I should equally since everything is synchronized with our mobile phones, if I should equally move to my MetaTrader 5 app, this same position is going to be available there. And if I move to MetaTrader 5, for instance, there, hopefully we can see on the screen, and I come to trades, that's it. We can literally see the same position that's open there in a way. So it's going to be very important for us to do what to take key notes on how this works. Okay, so these platforms, they help us calculate these positions automatically without a lot of hindrances. So it's very important for us to note all that. And in case you have any worries, you can always drop the worries in the comment section, and it's very important for us to know that in a way. Okay, let's say if you're equally here as well and you have to open a market position, let's say you're not the price that you're currently at, you don't want to enter that position. What you then have to do is you have to place a pending order. A pending order helps you set a predetermined price that whenever the market gets to this position, before I want to enter the position, I don't want to enter the position just now. I want to wait for the market to hit this particular zone before entering that zone. Okay, so get to XNES terminal, then play around with it, get a lot of information from it, and these are some of the benefits you get of it than using the mobile application or even than using MetaTrader 5 itself. So with that being said, don't forget to like, subscribe, and share with friends to those that might be interested in it. Okay, so see you guys in the next video.